Yes. So, welcome, ladies and gentlemen. Welcome, everybody. Today, we want to talk about trading gold and trading the S&P 500. Gold being one of the most popular instruments in the market, especially with traders nowadays. I mean, we can say this is like, if not the most traded instrument in the market, basically one of the most traded instruments that we have across board. All right, welcome Heritage Adesar is joining us today for the first joint Friday webinar session. I think we've always done it individual. We've always done it one person for whichever topic every single Friday. But today it's a joint floor. It's two people. I think at no point in time would anybody reject two instead of one. I think two over one will always be one interesting thing to look out for. Heritage, welcome. It's nice to have you here
Thank you,
today.
Mano. I think I'm enjoying the new joint sessions. I think it just gives that opportunity to share opinions, share ideas, rub minds together. And I think there's much more value when you have a discussion. I think it, brings more perspectives than just one person. It's an absolute time to be here. We're here in the morning as well. We had some conversations, but today's topic is literally very tempting. I mean, we're talking about gold, 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 and of course the major equity that traders also trade. And I think this is an absolute opportunity for us to talk and get our insights into these instruments, how best to approach them, and how best to find opportunities with them. Thank you for having me.
All right, thank you for joining us today. I believe that people who are currently on the live also share the same sentiment that this is probably one of the most important topics that people can always relate to. I feel like it's a known thing right now. Everybody's interested in gold. The volatility of the market makes it one of the most, attentive market for traders and whatnot. But I think one way or the other, there's still probably a gap in knowledge with trading gold. One of the most important questions that people would always ask is, Sir, what moves gold? What am I supposed to look out for when trading gold? I feel like I don't really understand the volatility with gold. So, what are some of the things that I pay attention to? Because it's not like the other currency pairs that you might think you have to look at these like economic data, events. So, what exactly do we need to consider when trading gold is one of the things we're going to be addressing today. Another thing we're going to be addressing today is one very important question. What has happened to the inverse relationship between the US dollar and gold? Is that still there? Is it still existing? Is it still something that we're expected to consider, when trading the yellow metal? This is also something that we will look to address in the session today. And also, what is more paramount or what more important to trading gold? Is it the fundamental side of things, or are we supposed to pay more attention to the technical side of things when trading gold? I feel like we also need to address that. And also, we're going to talk about the S&P 500, all right, the US 500 also in trading today. How does earnings affect, US 500? How about the relationship of the S&P 500 with the bonds market? This is one of the things we're also going to be talking about today. And also, how does the position of the US dollar affect both gold and S&P 500? Is that relationship still strong? Which one is stronger right now? Which one can we look to explore right now? And I think this is some of the topics that we're going to look to explore during the webinar today. Heritage, I hope you're ready for a very long journey. There's quite a lot to talk about, and I think it's a really, really interesting topic to deal with. What do you have to tell
All
us
right.
about trading gold? What's your go-to analysis for gold? Like, what are some of the things you love to consider when trading gold and looking for opportunities in the market?
There's no doubt that gold is one of the most popular assets among Nigerian traders. I think a lot of them, right, like gold. And if you try and find out the major reason why gold is very, very popular among a lot of Nigerian traders is the volatility that it comes with, the excitement that it comes with. It's believed that when gold moves, gold moves. And of course, it can provide good opportunity when price is going in your favor, although it can be very tricky if price does not agree with you. Now, I think because it's so important as a major asset class and tends to also play into all the major stories that you could have in the market, be it sentiment. Yeah, it may not be a currency per se, but of course, whatever drives currencies, right, also has in some cases, right, a relationship, either positive or inverse, with gold. Now, when it comes to my approach to gold, one of my major go-to analysis, I don't change so much when it comes to my technicals. When it comes to my basic support level, key levels, breakouts and pullbacks. But what I always consider when I'm looking to trade gold, I look at relationships, I look at yields, I look at sentiment, right? Of course, I look at demand and I look at the dollar, right? These are mostly the major factors that in the past, over time, have proven to have an influence on gold. Now, of course, in recent time, some of these factors, these correlations have reduced. Gold has really been rogue for a couple of months now. If you look at gold over the last, I mean, if you pick it up over for the last 3 years, starting from 2022, really, gold has been on a solid, or let's say 2023, really, gold has been on a solid push higher, non-stop, right? Of course, it has thrived strongly in that inflationary environment. You remember that gold is also seen as a hedge against inflation, right? It's believed that when currencies lose value, when inflation becomes, overbearing, investors run to assets like gold to preserve the value of their assets. And you look at 2022 when interests were going higher after COVID, pumping money so much in 2021, 2022. From 2023, really, when inflation became a big, major problem, gold had continued to make stride high upside. If you had not paid attention to the overview, you probably would have not noticed that massive trend. But it's been very obvious in recent time that we've seen gold also push much higher as well. And I see, yes, some of those factors still remain intact. Some of the factors that still drive gold remain intact. And I think these are the major things I pay attention to, right? What's the inflation story? Of course, that's very key. What's the dollar story? Even though in recent time, like I just mentioned, gold has gone rogue somewhat, where it's no longer a strong correlation with the US dollar. A couple of reasons for that we can look into it, but of course, that has been the story in recent time. Of course, what's the demand story, which is like the major recent driver in the market for gold? And of course, what is sentiment? Because gold, don't forget, is a safe haven asset. There's no doubt about that. And of course, whenever you have these major negative sentiments in the market. Of course, gold is one of the assets that you also want to consider in terms of, further upside. So majorly, these are the areas that I pay attention to when it comes to gold. I always focus on it from the information side, but of course, on the technical side, it remains the same with my basic strategies that I use to trade other currencies.
Okay, interesting. I feel like the trend on gold over the last few, in fact, from 2023, 2024, 2025, also prices continued that particular upswing in prices. I feel like you're right, and this is one of the major things that we need to understand, that gold is not just something that people think about as just that euphoria asset. For a lot of people, gold is just that euphoria asset. It's just that asset where they just like to, trade and get this excitement from how much money they can make and how much losses they can also see as time goes by. This is something that you really need to understand from the fundamental point of view. What is happening with gold? What are some of the things, major things that moves gold, right? Eric mentioned the inflation edge, also very important. Its nature as a safe haven is also one key factor that has also, helped price rise over the past few days or few months and even years. And also the fact that we also know that gold also has this nature to pry its way into investors, portfolio, especially when there is risk surrounding currencies and some other assets like stocks. I mean, for a while, we knew that China had been investing in gold, increasing their gold reserve, and that also translated to even individuals in China, right? Looking to also keep gold as an asset. So it's buoyed up the demand for gold Gold prices started jumping on increase in demand from China. Investors are also, because as at that time, if you remember vividly, we had issues with the Chinese stock market, right? Every single stimulus rollout from China was not deemed okay according to the market. It was not something that the market was looking, forward to. And this was not something that the market was really interested in. And that, to some certain degree, made investors, especially from China, shift their attention from the Chinese stock market to gold as a suitable alternative. And that pushed prices higher. Before we know it, or before we even knew it, a lot of other central banks started buying into the idea of, okay, let's also get more gold. And then individuals started coming in, talking about buying gold as well. And then demand for gold went crazy beyond supply. And now, as demand exceeded supply, it was natural for us to see price maintain that upside push crazily for over years. In 2022, the trend has been upside, right? So it means this is not just, something that we're expected to see only from the technical point of view. If you're talking about the technical point of view alone, there are different levels that you must have considered. You would have said, price needs to actually come down. If you look at it, even from the monthly time frame, this is quite a push that is not just a day in the making. This is a push that most likely started from around 2016. In fact, if you look at it as far as even when record started around 2004, because I can't go beyond this, it's been a nice upside push. And now we're trading close to $3,000. Peak high is about 2,955 or thereabout. This is not a move that you can call a technical move, or a move that is just simply bearing on how prices are just moving. Let's just say it is only support that is just pushing prices up. No, this is a lot of factor in the work. This is demand and supply. This is sentiment, nature of the gold as a safe haven to push higher. This is central bank also demanding for more gold. There's a lot of factor that we could look out for, especially when trading gold prices. Yes, we're not saying technicals don't make sense, but we're saying it makes sense when your technical fits the narrative you have for yourself when it comes to trading the yellow metal. Heritage, yes, we know that at some point, the relationship between the dollar and the gold used to be really negative, right? If we saw the dollar rising in the market, it was natural for us to see gold falling. I mean, it used to be a time where we just traded negative dollar for gold, right? Whenever we had high impact
Yeah.
information for dollar, it was always a time where the market was always alive to trading gold. NFP is released, good or bad, gold is jumping in, even more than equal opposite reaction, right? So there used to be a time where whenever we saw high impact events for dollar, gold opposite is always what comes to mind. If dollar is rising, we're looking for opportunities to sell gold. If dollar is falling, we're looking for opportunities to buy gold. But it seems like that is almost out of the window today. According to a statistic that I saw, on Kobe's letter, I think sometimes this morning, or was it yesterday? It was talking about how gold prices are up at least 50% over the past 14 months alone. Gold prices are up 50% over the past 14 months. It also says that gold market cap just hit 20 trillion for the first time in history. This is interesting. But also, another interesting stat that was given to this is that, but also if you try to look at it from late July, gold prices are up 24%, while the US dollar is up 2% and the 10-year yield is up 8%. I mean, this completely goes against the inverse trading of dollar for gold. What do you have to say about it? If you look at these statistics, gold is up 24% from July, dollar is up 2%, even yields are up 8%. What's wrong with the connection? What's going on? What do we think about in that particular environment?
I mean, if I knew, right? I mean, I think I'll be happier than I am right now. I don't know exactly what, that where that break started from. And I think of course, we have to agree that generally we know that in trading, in markets in general, correlations are not 100%, in as much as assets tend to behave a certain way because of certain reasons, right? It's not always 100%, and these relationships can be broken down at certain periods and can also realign after certain periods. Now, I think the major driver for gold is not just about the dollar now, right? I think there's a demand, story behind gold that has been, a bigger driver. Don't forget that there are times when you have massive negative sentiment in the market, and dollar being a safe asset rises just as much as gold, right? So I think the factors driving gold now are not directly tied to the US dollar. And that's why we're seeing that inverse relationship. If what we have, there's no other big deal going on in the market, it's just about the dollar, something about the dollar specifically, then yes, you could see that relationship creep back in. But when you're talking about underlying demand issues, when you're talking about general market sentiment, when you're talking about other things like that, right? Of course, Trump policies coming in, inflation could become another problem. When markets are seeing the policies coming in as a, inflationary policy, quote and unquote, right? All of these underlying issues could have been the factors that pushed gold higher or have been moving gold higher, regardless of what the dollar has been doing. So I think it comes from the demand sort, right, in the underlying asset, and not necessarily something quite clear that everybody can point to as the culprit for that break in relationship. Now, I'm not so surprised, but one thing that we must always know is when there is that break in relationship, we have to make adjustments as well. As traders, we must be flexible to know when the relationship has broken, the correlation is no longer as strong, and adapt accordingly. When I have people chat me up and talk to me about trading the market and talking about something is coming up with dollar, we're analyzing the dollar, and the next thing I have is a chat in front of me talking about gold, right? Of course, I'm always saying, don't forget, yes, we know that gold naturally has an inverse relationship with the dollar. That is, when dollar goes up, gold goes down, which is the normal expectation. But in recent time, that relationship has been broken down, hasn't really been as smooth. So when we have issues around the dollar, something around, data, I'd rather you focus on data related currency pairs. If you want to trade gold independently as well, because that relationship is no longer as strong. So I can't point and say this is the one reason why I think so, but I think generally because of underlying demand for gold, inflationary story as well, I think traders have started to look at gold independently from the dollar. It doesn't mean that the relationship is broken forever. That's not what we're saying. But eventually it could come back into play.
All right, thank you. And I think this makes sense, and this is one of the major things that you guys also need to understand that yes, there used to be a time where the relationship with dollar used to be like one of the main things that we trade. I mean, on some days that relationship will still be there, but overall, right now, I think the market is more inclined to trading the original story that we have for gold right now, which is the surging increase in gold demand. And this is very, very important. And one of the major things that was also highlighted also as one of the major reasons that is driving gold is the fact that China is selling US treasuries and buying gold. You're right. And this is one of the major things that is quite important. I'm looking at a chart right now of the divergence between China's gold rush. Like they're buying quite a lot of gold right now in China. So yes, this is one of the major things we must consider. Demand right now is definitely higher than supply, and this is key for you to consider right now. All right, now listen. Yes, we know about trading it with demand, following up recent stories about what is moving things and how volatile the asset is. And I also think you should also note that when you're trading gold, one of the major things that you also need to know is that your technicals must be strong, right? It is key to realize that the way you navigate the technicals on gold also is as important as the information that you know and the direction that you want to trade with gold prices. Also, quantity control is also important. Gold is not an asset that you also want to flex muscle on, except you have the right account size. It's not a market where you should be looking to, risk the whole world on saying, if I die, I die. I don't think that might be necessary on gold because it could actually be it is actually a really, really volatile asset. So yes, your technicals are important, your support and resistance, key levels are also quite important on gold. So it isn't just about the trading. It isn't just about there's increase in demand. China is buying more of gold and selling more of US treasuries. People are demanding for more physical gold. So I'm just going to be blindly buying gold. No, absolutely not. Your levels also must be very, very important. It is absolutely key that you pay attention to swing levels, support and resistance, and then also allowing candles play out before looking to jump into the market. For example, gold is not an asset that you draw up a level of support for, and then when price tests the level, you just say, I'm going to come into the market without allowing a closure. I'll give you an example. If you look at this particular level of support, somewhere around here, right? Apart from the fact that this has been a level that has been breached multiple times, but right, a good level of support. And also, if I isolate what has happened on this level today, you could see that the all of today, I mean, from the midnight trading, price was not able to go beyond this region, right? Tested it multiple times. We saw this first test. It was rejected. We saw it again. This level held. They saw it again, again. Price kept, holding on to this level. I mean, without confirmations, if you had thought, okay, since the price was coming back again to this level, I don't need price to close. That's a good level of support. Let me just jump into the market. The problem is, look at the next candle that formed. I don't think there's any level of stop loss that you might have had that wouldn't have been taken out with this single candle. I'm not sure if there's probably any level of stop loss you might have had that wouldn't have been taken out. Because if I think about it, the next level of support could be somewhere around here. So even if you said, let me hide my support, sorry, my stop loss somewhere here, maybe using this low as an example, even if you say, let me hide it below this one way or the other, both of them were completely taken out before price returned back up. So one of the major things you definitely need to understand with gold trading is your technical levels must be strong, and also awaiting confirmation is one of the most important things that you must hold on to. It is not just about, price is stressed, testing this level of support, I'm just going to buy, or price is testing this level of resistance, I'm just going to sell. I don't think that's the way to it. I don't think that's the way to it. I believe that if anything, what we must do is ensure that our technical levels are confirmed. One thing you will notice about gold this period, and that you must be careful of, is, have you imagined where you're trading? In case you've not imagined it, let me give you a retrospect of where you're trading. This is where you're trading. You see, all of those price action that looks so big on the 30 minutes time frame, look at where you're trading right now. Just check it out. Look at where you're trading. And you're trading at peak highs. You 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 cannot be too careful. In fact, you must be. I don't think if there's anything called over careful, but you must be very, very careful. You're trading around peak highs with there is we've not had any serious level of retracement over a long period of time. I mean, we've not had any serious level of corrections in prices. I mean, there was a time we had this deep correction, right? We've had some really deep corrections over a long period of time. But this was the last time we had any deep correction, even after we had this on prices. We've not had any deep corrections since I think November or December. So you're trading around, this very small box at the very top. You must be careful of empty candles, get crazy rejections and prices. All of this price action you're looking at is going to be the order of the day right now, as long as you're trading gold. You see things like this, right? With crazy levels of rejections like this, and eventually prices storms back higher. All these kind of rejections are going to be the order of the day for now. Why? Because we're just trading around region where everybody's just looking forward to, taking whatever they can get and then exiting the market. A lot of, I don't know, there's something we call rug pull in crypto, but we could be seeing a lot of stop ons, as you people like to call it, in the market this period. We're trading around some crazy peak levels. You must be very careful with them. You have to be very careful with those places. Quite significantly, one thing you must do is ensure that if you're in, make sure there are good levels with enough confirmations. There's quite a lot going on. There's quite of heavy candles, look at heavy candles everywhere. Look at this. All of this are things that you need to, watch out for as long as you're interested in trading gold right now or trading around peak levels, ladies and gentlemen. You must be very, very careful. Heritage, can you usher us into US 500? S&P 500, what do you like about S&P 500? What do you tend to look out for when it comes to S&P 500? Has it been a market for you to trade over the last few weeks, months? Is this something that you have, your attention on? Or why do you actually even look at US 500?
Now, the US 500 may also be an asset that some traders, allow sleep under the carpet, right? Where we don't pay some attention to it. A lot of people just focus on gold, focus on currency pairs. But the US 500 can also be a very, very interesting asset to trade because a lot of times the movement is pretty straightforward, right? You notice that in the stock market, when people are buying, ETFs or indices, like something like this, right? Most people are buying it to hold. That tells you that over time, this asset is expected to move higher and higher and higher. And then it's an asset that traders can also take advantage of, even in the short term. What do I pay attention to when I look at an asset like this? First of all, when price moves on an asset like this, it moves quite a lot, right? In terms of pips, right? If you pick, for example, just the movement that we've had today, for example, let's say for this week, yes, it has not been a lot, but if you pick the upside on the 13th of February as an example, just to give you some context to this, if you pick the upside on the 13th of February, and you simply just pick a trade, you just look at how much price moved at that particular level, right? You'll notice that price moved if you're trading just the minimum lot available to trade on our platform, and you pick it from that particular level down the ties to the bottom point on that particular instrument. Now, of course, that number of pips there is over 800 and something pips, right? That movement alone on that day. Now, of course, you have to look at the lot size and make sure the lot size fits the reward so that it's not, small in that sense. What US market is also a volatile asset, and the factors that drive them are stock markets in general. But in this case, we're talking about US 500. It's pretty straightforward. One of the things that you look out for when you trade US 500 is number one, the sentiment in the market. Because it's basically the stock markets in the US, and stocks are known to be very sensitive to positive and negative developments in the market, it provides opportunities for you to trade. When you have positive market sentiment, where you have good news, less bad news, progress, good news about global trade, the global economy, the US economy, positive news in general, we expect the equity markets to rise naturally, US 500 being one of them. When you have negative developments, when you have bad news in the economy, bad data, things like that, you expect the US 500 as one of the stock indices to react negatively in that light. Another factor that you want to pay attention to when you trade the likes of US 500 is to look at what the central bank is doing. Businesses naturally prefer a low interest rate environment, naturally. So whenever it seems like central banks are cutting rates, they're not excited about increasing interest rates, things like that. It's also another exciting factor for the stock markets, including the US 500. when you have, lower rates, or you have central banks being less enthusiastic about hiking rates, being more dovish, of course, you can expect the stock market to jump higher in line with that. But of course, on the other hand, when central banks are looking to hike rates more, it's not so great for the stock market, particularly the US 500. So the first factor you want to look out for if you want to focus on trading an asset like this, right? Yes, it is also volatile in itself, even though the PIP value may be lower, despite the PIP being a lot more. But the fact is, one of the major factors you can pay attention to when you trade the stock markets in general, equities in general, particularly the US 500, is market sentiment. Market sentiment being positive market sentiment, right, is a positive factor for US 500. It tends to go up when the market sentiment is positive. Negative sentiment, whatever the case is, wherever it's coming from, tends to be negative for the US 500 among other equities, and it tends to lose value in that condition. Another factor you want to pay attention to as well is the central bank's decisions on interest rates. Of course, higher rates, looking to keep it higher for longer, is not the best for equities, even though in recent time, the relationship has more like broken down quite a bit. They have been more resilient to push higher, regardless of what the rates have been. But it's still a factor you have to put at the back of your mind. And of course, lower rates, looking to cut rates, being more dovish is very positive for the stock market equities. The third factor I want to mention before I hand this over back is companies and their performances. Remember that the US 500 is simply an index that measures the top 500 companies, I think 505 companies in the US, really. And they just put their stock price together. So it's more like you're trading all the Amazons and Teslas and Facebook and Google Alphabet and so on and so forth in one index in a cost-effective way, whereby buying the US 500, you're buying a portion of all those companies through that index. So of course, it looks at a lot when it comes to the performances of these companies, particularly the companies that are biggest in that index. So something going on with Facebook, for example, something going on with Google, for example, something going on with Tesla, and you can Amazon and the rest of them. Of course, it has a major effect on an asset like US 500. So things like earnings report, when companies release their quarterly earnings and performances, telling markets how they performed, how much they made in profitability, and offering markets an outlook on what they think about their company in the next couple of weeks and months and the global economy in general. This can also be a time where you can trade the US 500. So that means that when we have more better than expected earnings, when companies are reporting good numbers, solid profits, earnings per share higher, good news around these companies, new innovations, new markets that are breaking into and stuff like that. Of course, the equity markets in general tends to appreciate on the back of that, tends to rise on the back of that. Buying US 500 would not be a bad idea under such circumstances. On the other hand, though, when the earnings reports are released or news about these companies are released and they're more negative, right? The outlook is bleak, right? The numbers, profitability is not great, and you have things like that. Of course, it affects the stock markets, particularly in this case, the US 500 negatively. So whenever you're trading an asset like this, it's not enough to just look at the technical side of things. You should always look at the factors that drive them, because when you combine both of them, it offers you a much stronger and better trading opportunity. This week, if you look at the US 500, all through from I think Friday, even last week, it's really not done so much. It's really been in a major range, really, for that space of time. And you notice that it has been because generally in the market, we've not had any major drivers to help us out. Now, going into next week, for example, if we get maybe a geopolitical story, maybe a breaking news with the Russia-US negotiations, Ukraine featuring all of that, if you get a good news, a breakout where there's more progress, it's seemingly like the war is getting closer to an end, stuff like that. Of course, it's a good thing. It's a good news for the market. It improves market sentiment. And when market sentiment is improved, of course, you can expect an asset like US 500 to jump higher in excitement for the global economy. On the other hand, if we have news that, oh, there's stalemate, oh, we can find an agreement, oh, Ukraine and US are going at each other's neck, and then Zelensky is calling Trump or saying that Trump is moving in misinformation. Trump is calling him a dictator, and there seems not to be a clear progress and negative or a setback in the negotiations or in the talks. Of course, that's a negative in general. It's not good for global trade. It's not good for global relationships. The stock market, you can look at the US 500 as an example, would suffer on the back of that. So it's an asset that you can also add to your radar. It tends to move quite well, and it has a lot of drivers behind it. Could be sentiment, could be central bank interest rates, could also be economic data itself, because when the economy is doing well, businesses do well. When businesses do well, the stock markets, like the equity markets, and even the US 500 tend to also do well as well. So you can look at market sentiment in general. You can look at the economic performance relating to the specific country that originates this index. You can look at what the central banks are doing as well. Of course, higher interest rate environment is not the best for equities. Lower rate environment is much better for businesses and by extension their equities. And then you can also look at the geopolitical side as well. Whatever is going on the geopolitical side also has a major effect. Finally, looking at the company's performances in themselves can also affect this. Now, of course, it may not be the biggest driver, but big companies have big influence on the general equity index like the US 500. So when you look at factors that influence this asset, US 500, I think you need to look into these 4 or 5 factors. Now, the good thing is the same way you do analysis for currencies, where you scan through the news platforms, you look out for what is going on, sentiment, and the likes. You can as well do the exact same thing for the equities. It's just that you need to look at information relating to sentiment in general, and maybe in some cases, information relating to the stock market in general. But I think if you focus on these factors, you can have a clearer idea on what is going on with the equity market, particularly US 500, and that can provide you trading opportunities as well.
All right. Thank you so much for that exposition. Um, it makes a lot of sense that people also consider, US 500, especially when trading. For one, this is one very nice instrument that moves quite a lot, like you mentioned. It moves a lot also, highly volatile as well. It has every euphoria that you're looking for also, but it moves. That's one interesting thing about it. And being a major volatile instrument in the market means for people who are quite, inclined towards trading sentiment, either positive or negative, trading US 500 might be something for you to look towards, right? Because remember that when we talk positive market, risk on, right, we talk about that being an environment where we have risk assets or highly volatile assets, gain value naturally. During a positive market, like I explained, it's a period where we expect that volatility is something encouraging for investors. They feel like, oh, everywhere is nice, everywhere is good and calm. This is an opportunity for me to make some money. Let me trade some highly volatile instruments in the market. They look towards investing in stocks. Stocks become a very good option for them. They look towards putting money in stocks and other volatile investment, taking money out of safe assets and taking it directly, to volatile instrument like stocks, equities, and one of them. And US 500 being one of the most popular, equity index in the market, the S&P 500, an index that measures the performance of the top 500 manufacturing companies in the US, means during positive market risk on, we should expect that under normal circumstances, US 500 should rise. Now it means if we get a good level of support, could offer us opportunities, right, to get in on further upsides on US 500. It's a market that really responds, so well to global market environment, the geopolitics, sentiment, right? So if geopolitics comes and it is negative or positive, let's start with positive. For example, there's a trade agreement deal, that is being worked on between Russia and Ukraine. If that eventually goes through, that is seen as a positive event. While you're busy looking at how you can fight Euro USD, Pounds USD, or fight USD JPY for opportunity, the market somewhere is moving so well on US 500. And prices are doing so well. Prices are rising from good levels of support. Why? Because immediately something good hits the market, we see some flows immediately go into highly volatile instruments like stocks and equities, with US 500 being a major center of attraction. The reverse of this is what we have for, negative market, right? When we have negative market as well, naturally the risk assets are thrown away for safe assets. Volatile assets loses value. They lose value. And in this case, risk off, which is another name for negative market, US 500 should fall. And we know that from technical perspective, all you need to do is get yourself a good level of resistance for further downside. So yes, this is one of the most, important instrument assets to trade, especially when it comes to sentiment and how the market responds to global market environment and news. Also, you need to understand that the relationship between the US 500 and the US dollar, like I did mention, is also negative, right? Which means if anything, I expect the stock market to move first before the dollar moves or affect the US dollar. But right, if stocks are going to rise, if there's room or avenue for you to expect dollar weakness in the market, you should expect that the US 500 should be rising. If for any reason you're expecting dollar strength in the market, you should also be looking for US 500 downside. Take, for example, as we're going to have NFP, and maybe for one reason or the other, from how the market is positioned on the USD index or what the market is saying, you're expecting weakness for the US dollar in the market. You could as well be holding on to strength for US 500 upside. Yes, equal, opposite. If we're expecting, prints for NFP to be, relatively good for the dollar, which means you're expecting upside for dollar, you could as well hold the narrative of downside for US 500. I mean, when we compare the relationship between dollar and gold, which is relatively negative, and you also compare the negative relationship between US 500 and the dollar, right now, that of gold and dollar seems to be out of the window, but that of dollar and the US 500 is still well inside the window for you to consider. It's one of those instruments that you can also look to add to what you trade in the market. Yes, it is volatile, trades negatively with the dollar, also responds so well to sentiment, global market event, global, happenings on the geopolitical front. Also, with stock prices, especially some of the companies that are represented under the Standard and Poor 500. All right, when we have earnings season is also another environment that also helps us trade the US 500. And also, US 500 is a market that you could also trade with seasonal patterns. Stocks have seasonals. Stocks are seasonals, right? Seasonals, which means what we expect of some of those instruments on some certain, months. So we can say, oh, December is a month where we expect that stock prices would always rise. Oh, but July is a month where we see stock prices will always fall, right? So we have some seasonal patterns also that make so much sense on US 500 that you could also consider for trading. So it is volatile. It has, different movers that also determines how prices move. All right. And this, for example, I can read this for you. It says, naturally, these are some of the seasonal patterns that we have for um, S&P 500, especially US 500 right now. It says historically, the S&P 500 has shown propensity to perform well during autumn months, particularly September, October, and November, right? That's a seasonal pattern, number one, right? Naturally, we've seen that US 500 will perform so well, prices would always rise, between September, October, and November. right? US 500 rises or S&P 500 rises, but we don't call it S&P on our platform, we call it US 500. Price rises. Naturally, that's a seasonal pattern we have on US 500. Also, we have what we call a May sell-off for S&P 500. It's called a May sell-off. May sell-off. That is, naturally, in the month of May, we don't naturally see S&P or US 500 perform so well. Naturally, we see it fall in the month of May. This is one of the seasonal patterns that we also have um, for S&P 500, and also naturally the holiday seasonal effect is also there. For example, December also is a period where we expect US 500 to also rise. I feel like it's a known statistic that at least 70% of the year, S&P 500 is always going to be rising naturally because stock prices tend to do well in most of the months in the US. So yes, different factors contribute to movement on S&P 500 that are quite relatable to. Inverse relationship with the dollar is still there. Movement with sentiment also still alive on US 500. Also, seasonal pattern movement that we've also seen for that particular instrument is also something to consider. On the technical side, you can keep it simple. You don't have to draw all the double pattern or double bottom in the world. Keep it simple to simple levels of support and resistance. Ensure that whenever you're looking for a buy, you're looking for a buy off a good level of support. And whenever you're looking for a sell, you're definitely looking for a sell off a good level of resistance. If you hold on to this, S&P 500 or US 500 remains another market that you can also add to your trading instrument. Heritage, do you have anything you want to add to US 500?
I think you've covered it all. And I think that generally we should look at markets as not independent of themselves. In as much as you operate in the markets, in our cases, we're trading with through CFDs. You may feel like, oh, you trade currencies. You may feel like, oh, you trade gold. You feel like, oh, you trade copper. It could be any asset, but have it at the back of your mind that no single instrument stands on its own. Yes, we may say that correlations are not 100%. Correlations break down all the time, but it
Absolutely.
makes sense to also, scan through different instruments as well, even though you're not trading them, just to have an idea of what is going on. Who knows? What you see on another asset could better solidify or confirm a bias you have on the instrument you're trying to trade, or maybe even provide opportunities in itself as independent of what you already naturally trade. I am a strong believer of widening your net and looking at different assets and not just limiting yourself to one. And the reason why I believe that is I think it provides you more room. You don't get to be stuck with only one asset and be forced to take a trade when there's nothing to be done. But if you're only looking at one single asset, when there's nothing tangible to be done, you feel like, oh, you're not being productive with your time, and you probably will be forced to force something out. So I think don't look at markets isolatedly. Whatever you're trading, always try to keep an eye on what is happening across the major asset classes, on things like Bitcoin, on things like gold, on things like the stock market. You can use US 500 as an example, and then on the currency space as well. I think that they can generally always give you a holistic view of what is going on in the market and can better solidify the opportunities that you have.
All right, thank you. Thank you for that. And it is quite important that we remember that diversifying one portfolio is as important as investing itself, right? You don't want a situation where you are not you're limited to only one particular instrument when there are still some other opportunities on some other instrument. And yes, US 500 is a market to also consider, especially when it comes to trading the global financial market. This is key. If you have questions for us about gold and about trading US 500, please put them in the Q&A. We're going to answer a few of them, and we're going to close the session today. Someone says, what's your opinion on pounds USD? We're not necessarily here for market analysis, but Heritage, do you have any opinion on pounds USD?
In general, I think we spoke about this in the morning where we said that US dollar pairs in general have been very, very, very sluggish this, week, right? Pound USD right now, yes, it may seem like the week looks like it went up overall. But if you take Monday, Tuesday, and Wednesday out of it, if you take Thursday out of it, really, there was no tangible upside on pounds USD. It was basically flat on Monday through to Wednesday, and today as well is basically flat, even though it's like ticking lower quite a little bit, but it's basically flat. I think for major currency pairs this week, it has been a very slow environment, not much drivers pushing them around, markets holding their breath, waiting for any news out of the the US and what's it called? Russia talk. So I think next week could provide us much better, opportunities to look out for, particularly that we have some more interesting, events on the calendar for next week. For the US, we have consumer confidence, we have GDP, we have unemployment claims, right? And for the UK, I think for UK, what data is there for UK next week? Okay, not so much really on the calendar for UK, but US has core PCE, for example, the major, inflation measure for the Federal Reserve in the US. I think next week could provide us more opportunity. But for this week, pounds USD have been absolutely slower, and it didn't really get my attention for the week.
All right, thank you. Yes, and absolutely. If you look at it from the chart as well, you notice that it's not really moving that much, even despite the PMI releases and all of that. We're still trading within some, volatile market environment. It did rise on a strong PMI print for dollar, but if you look at this and you isolate this is still not a market that we might want to offer any strong opinion on right now. So for now, we might not have any particular analysis for you on that particular instrument, okay? Let's see if we have any other questions. That is not pertaining to just doing analysis. We should touch on how to trade NASDAQ 100. I think there might be a session on that. We don't have so much time. We have to close this by 12. But Heritage tech stocks, NASDAQ 100, any briefing about relationships that we can look out for with NASDAQ 100 before we close the
I think
session?
we can look at Nasdaq as a very similar asset to the US 500. I think the assets that are in the US 500 or are in the Nasdaq are almost all in the US 500 as well. So I think you notice that there's also a correlation, just that it's more tech um tailored. That means that whatever happens in the tech space with the tech companies in general, you get that reaction faster on the Nasdaq because it's more reactive to that being the concentration. But of course, similar story with US 500 also applies to the Nasdaq. The similar factors that drive them in general also affect the Nasdaq as well. So when I talk about the stock market in general, the equity market in general, even though we use US 500 as the major talking point, of course, you can also apply the same principles to trading the Nasdaq.
All right, thank you for that particular answer, Heritage. So yes, I think that covers what we have in the session today. Thank you, ladies and gentlemen, for joining us today for this really, really interesting session. It was a nice session for us to consider and look for opportunities on in the market. Please enjoy the rest of your day. And it is goodbye from us today, but we're going to still be available to help you when you need us online and on our social media pages. Thank you, ladies and gentlemen, for the session today. My name is Emmanuel Akela, and my co-host today is Heritage Adisa. Thank you, and bye for now.